I lost nearly every dollar I had to my name, and I decided to quit trading altogether. That was one of the best decisions I ever made. You see, whenever I first started trading, I lost 80% of my overall net worth, every dollar I had, in a matter of 8 months. And I was on track to lose the rest of it just as fast. But at that moment, I made the decision to stop trading with real money and go back to the drawing board to learn how to actually properly trade. I know that sounds revolutionary, right? Learn how to do something before you attempt doing it. But after taking just a few key steps to learning how to trade the right way, something crazy happened. I started to actually make profits. So in this video, I'm going to be sharing with you the steps that I took that took me from someone who was losing nearly every dollar they had in trading to someone who can consistently pull profits out of the market. The simple steps I'm going to be sharing with you in this video help me to completely transform my trading. And hopefully, if you take these steps correctly, they can help you to transform your trading as well. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new. And I'll catch you on the other side of the intro and disclaimer. Welcome back, and here's what I want you to do. I want you to imagine with me that you're in a car and you're going to a destination that you've never been to before. This destination is profitable trading. The steps I'm about to show you is the map to that destination. So if you don't have a map to a destination you've never been to before, you're very likely going to get lost multiple times along the way and may never even get there, right? But if you have a map, your chances of getting to this destination without getting lost are much, much higher. So with that said, let's go ahead and dive into this video. And I'm going to start off by telling you each of these steps. But once we get through all of the steps, I'm going to go back and give you a corresponding video from our channel that will help you master that step. So be sure to stick around for that, and let's go ahead and dive right into each of these steps. Please excuse my low energy today. I actually have the flu, but rule number 76, no excuses. Play like a champion. If you can guess what movie that's from, I'll be really impressed. Like, leave it in the comments below for real. But with that said, let's go ahead and check out the Profitable Trader Checklist. So this is going to be the beginning of that map that I was talking about earlier in the video. What we're going to do first, in our very first step with anything in life, especially Forex trading, is to learn the basics. Now, when I say basics, I don't mean anything on a chart. I'm not talking about candlestick patterns or anything like that. And I actually made a big mistake with that at the beginning of my trading career. I'll tell you a little story about that in just a second. But to give you an idea of what I mean by the basics, let me actually bring over a screenshot. So when I say basics, this is essentially what I mean. It's nothing to do with a candlestick chart, but more so the foundation of your trading in general. So in the Forex market, when I say basics, what I'm talking about is understanding what the Forex market is, understanding what a currency pair is, what a pip is, how to calculate the value of a pip based on your position size. For these four, if you're missing any of these, it's definitely time to go back to the drawing board on the basics. But also understanding what leverage and margin are and how they work. These last two, 4 and 5, are something a lot of traders are struggling with. And number 6, what are the different types of brokers and their benefits and drawbacks so you can decide what broker is best for you. Also, how to navigate, analyze, and trade on TradingView or whatever trading platform you're using. It doesn't have to be TradingView. Maybe it's MT4 or MT5 for you. Whatever trading platform you're trading on, if you're trading live right now, and you don't have a complete understanding of how to navigate that platform, analyze and place trades on that platform, then you need to go back to the basics. Also, what does short and long trades mean? What are entry stops and targets? How do I place entry stops and targets? And what is spread and how does it affect my trading? So if you're having trouble with any of these things, it is as simple as typing the exact wording I have on the screen in Google or in YouTube, and you'll get plenty of resources to help you better understand those things. But these 11 things you need to have a deep understanding of in order to check off the first part of the profitable trading checklist and to begin that journey to profitable trading. This is the start of that map, is understanding the basics. And just to give you an idea of the 3 most common mistakes I see from the basics section, being a trading educator and getting plenty of emails every day on these subjects, one of the most common things, and this is really, I'm not trying to be mean to anyone that is like this right now, but this is disappointing to me as a trading educator. And it is, what is a pip? This is what I mean by this. I've had traders that are trading with real money send me photos and question being like, hey, the euro dollar just moved 100 pips. And this is what the price of the euro dollar did. The euro dollar may have went from 1.07253 to 1.07353. And that trader will be like, yo, this currency pair in 5 minutes, the euro dollar just moved 100 pips to the upside. Now, if you can't tell what the issue with this is, then you don't understand what a pip is. And I hate to tell you that, but this last number is not a pip. And the problem with this trader is they're expecting it to be. They're going, holy shit, 253 up to 353, that's 100 pips. That's not. This last number is not a pip. A pip on every currency pair other than JPY is going to be the fourth decimal place. Here's the decimal, 1, 2, 3, 4. So this is where the 1 pip is. So in reality, this pair did not move 100 pips in 5 minutes. It moved 10 pips in 5 minutes. So if this is a problem you're struggling with and you're trading with real money right now, you're going to end up losing money because you don't understand what a pip is. You need to go back to the drawing board and start to understand that. The second most common thing that I don't have time to actually explain right now, unfortunately, is not understanding what leverage and margin are and how they work. This is by far one of the biggest problems I see with traders trying to learn the basics. Leverage and margin are a bit complicated to understand, but it's something you will need to completely understand before you put money into a live account and start real trading. You can't do that if you don't understand leverage and margin because they play such a big role in the Forex market. And again, at the end of the video, I'm going to give you resources to help you master all these. So don't worry if you're like, well, how do I learn? I'm going to tell you that towards the end of the video. And last but not least is how to calculate the value of a pip based on position size. So to give you a little funny story of this, you would think that anyone would know to master the basics before starting to trade, right? Well, I didn't. Like, these are mistakes that I made. So I personally had an account that had about $1,000 in it, and I knew everything that I thought I needed to know about technical analysis. I knew candlestick patterns. I knew support and resistance, trend lines. I knew all of that, but I skipped the basics. I didn't know how to calculate the value of a pip based on a position size. And the entirety of the internet was telling me that 100,000 units, one standard lot, was a very standard amount to place a trade with. So I would place a trade with 100,000 units, let that trade run throughout the day, and come back 4 or 5 hours later being $300 down in the account. And I had no idea why. I'm like, it only moved 20 or 30 pips. Why am I $300 down? Why did I just lose 30% of my account? Well, the reason is with 100,000 units, as a general rule, 100K, a standard lot, you're going to be winning and losing about $10 for every pip that price moves. So if you don't have an understanding of how to calculate the value of a pip based on the position size you use in a trade, then that is absolutely something that you need to understand before you open a live account and start trading. And I know a lot of this seems like common sense, but I personally made these mistakes. So I want to make sure to share all of this with you so you don't go through the same thing I did and get surprised about losing 30% of your account value in a matter of a few hours. So with that said, let's go ahead and move on now from the basics. But absolutely, if you're missing any of that, the first step, and in order for you to check off learned the basics from your profitable trader checklist, you will need to go back and master everything that you just saw on those 11 steps. Next up, what do you do after you know the basics? You need to learn technical or fundamental analysis, or both. And the reason I say that is because I know of plenty of traders that are strictly technical based, which is what I am, that make money from trading. I know a lot of traders that combine a fundamental catalyst with technical trading strategies, and they're very profitable. I know a lot of traders that barely use any technicals and they use mostly fundamentals, and they're really profitable. Point being, none is right or wrong. It comes down to what you would like to do as a trader. So whatever you plan to trade based on, you need to have a deep understanding of. For me, that's technical analysis, so that's what we're going to do through this section. So for me, I would learn everything I could about technical analysis, everything I could about candlesticks, candlestick patterns, chart patterns, support, resistance, trend lines, indicators, what you name it, right? And then that's not the end. What the biggest mistake I see with traders in technical analysis is they'll learn technical analysis and then they'll start trading based on random combinations of technical analysis. And this is what tends to happen. You'll trade 10 trades based on double bottoms at support. You'll lose 7 of them and you'll go, oof, that doesn't work. You know what? What I need to try is trend continuation trading, trading pullbacks. That's going to work for sure. So then you go to a pullback strategy, you trade it 10 times, you lose 6. You go, shit, this doesn't work either. The RSI indicator, that's what I'm missing. I need to trade based on the RSI. You do that 10 times and maybe it works the first 10, then the second 10, you lose 9 out of 10 of the second 10 trades. So what I mean is you're going to constantly switch back and forth and eventually go through losing streaks or drawdowns with whatever specific combination you're using at that time. And you're never going to be a consistent trader, which is going to mean you're never going to be consistently profitable if all you know is technical analysis. Technical analysis without a rules-based strategy you stay consistent to is about as useful as a bottle of water on a forest fire. It's not going to help you at all. So number 3 on the profitable trader checklist is you need to create or learn a rules-based strategy. So a rules-based strategy from a technical analysis standpoint just consists of a set of rules that you can stay consistent to. They're very clear rules, so you can stay consistent to them, and that we can validate have made money in the past. Because if something hasn't made money in the past, why would we trust it to make money in the future? So this rules-based strategy, again, needs to be based on a combination of technical factors, but the difference here is that we're sticking to it. So to give you an example from what we just talked about, let's say you said, I'm going to trade double bottoms at support. Instead of just taking 10 trades and losing 7, you take 200 trades throughout the year, and it turns out of those 200 trades, you won 150 of them out of 200. So you ended up with a really good win rate because you had a larger sample size where you were consistent to the same strategy instead of constantly switching how you trade. If you constantly switch how you trade and you're never consistent, you'll never be consistently profitable. Okay, so next up, let's go ahead and move on. What I was saying about validating something's been profitable in the past, this is a process called backtesting. So we take the rules-based strategy that we just created or learned from someone else. You don't have to create it on your own. There's plenty of rules-based strategies on our channel and plenty out there just on YouTube in general. So after learning or creating one, you go through historic data and you pick out every time that specific strategy happened in historic data, and you write down those results. On a Google Doc, I would suggest a spreadsheet because the calculations are a lot easier. You write it down on a spreadsheet and you ask yourself, out of a large sample size of trades, did double bottoms at support create a profit out of the last 100, 200 times that it happened? If the answer is yes, then you've backtested a strategy that has proven to give you an edge in the market. This is a very good thing. So you would do that for a number of different currency pairs. Then you would move on to step number 5. Step number 5 is to optimize that strategy. What I mean by optimize, you might test that exact strategy, right? Just as a generalization, let's say double bottoms at support. You test that, let's say out of 10 currency pairs. You notice that 6 of them work okay, 2 of them are really bad, and 2 of them are really good. Well, what you may do in order to optimize is say, okay, well, I'm going to pick the 2 best pairs and one of the okay pairs that performed the best as well, and I'm only going to trade this with 3 currency pairs. That would be a form of optimizing. You might see throughout your testing that, let's say you tested with a 1-to-1 reward to risk ratio, but realized that you could get 2-to-1 reward to risk ratios on a lot of those trades. So your another form of optimizing would be to increase your reward to risk ratio with this strategy. You might see that you need to move stops down to keep from getting stopped out, or up to get a better reward to risk. All of this would be optimizing that trading strategy. And another form of optimizing is just looking at the trades that you would be behind your computer for. We all have obligations, sleeping, work, kids, whatever it may be for you. You need to be sure that you're not backtesting something, and then when you go to trade it live, all the trades happen when you're doing these prior obligations. You don't want that. I've had that before. Trust me, it sucks. You don't want that at all. Number 6, after optimizing a trading strategy, now we're almost done staring at a chart without being able to trade with real money. Now we get through what most people would call the hard part, the physically hard part of literally staring at a computer, learning a strategy, backtesting that strategy, optimizing that strategy. That's a lot of physical work, not physically demanding like roofing houses, but it's a lot of sitting behind your computer and a lot of brain power goes into that. Next, number 6 is to learn and implement a good risk management plan. What this means is there's not a cookie cutter risk management plan that I can go, hey, risk 2% per trade and you'll be good forever. That goes around the internet a lot. But the purpose of a of a risk management plan is to keep you safe in a physical form, safe in your account, as in don't blow your account, to keep you safe in the account and to keep your emotions stable when you go through inevitable drawdowns, inevitable losing streaks. As a professional trader, I've had multiple times that I've lost 8 trades in a row. So what I need to do with my risk management plan is look at those 8 trades in a row and go, okay, what percent of my account would I be okay losing if I lost 8 trades in a row? And in a physical sense, how much money am I willing to lose on those 8 trades, right? And what amount of money am I emotionally going to be able to keep calm, not skip the next trade, not stop trading the strategy? What number am I still going to be able to be emotionally stable if I lose? So out of 8 trades, let's assume you risk 10% per trade. Out of 10 grand, let's say you have a 10 grand account. You lose 8 trades at 10% per trade, you're down 80%. You just lost 8 grand. Your chances of continuing to trade that strategy that may be profitable moving forward, it just had a losing streak like all strategies do. Your chances of continuing to trade that strategy are very, very low. Now let's say you did 4%, right? You're doing 4% per trade, you lose the same 8 trades, that's 32% going out of your account. Are you comfortable with that? $3,200 from a 10K account. Can you handle that emotionally? Are you okay with the physical money leaving your account of $3,200? Now let's back it up and say, what if you risked 1%? If you risked 1% on a $10,000 account, that's $100. If you lose 8 trades in a row, that's $800. Now, are you okay physically losing $800 and emotionally, could you continue trading the strategy? You're a lot more likely, if you lose $800, to continue trading your proven to be profitable strategy than you would be if you lost 8 grand, 4 grand. So the point of this risk management plan is just to keep you safe in your account, not blow it, and also to keep you emotionally stable during losing streaks and drawdowns, which come with every single strategy you will ever learn or create. And that's the point of our risk management plan. Now, before we continue, I want to remind you that this is the exact map that I used to go from someone who was on track to losing all of their money to someone who is a professional trader now. And if I would have skipped any of these steps, then I wouldn't be where I am now, and I likely would have continued losing money until I quit trading altogether. So I know that this seems like a very long, drawn out, and slightly boring process, but if you're still here after almost 20 minutes, I want to say that I can tell you're dedicated to trading, and thank you for sticking around throughout this video. Even though there's not charts everywhere and we're not talking about strategies, this is probably one of the most important videos you can watch for your trading career. So, with that said, let's go ahead and move on to number 7. Number 7 is to learn and implement good trading psychology. Now, if you've made it this far, let's say you've already taken every step on the Profitable Trader checklist so far, you already probably have a better trading psychology than 90% of retail traders. And the reason is because you've already taken steps to improve your trading psychology. These steps include things like backtesting your trading strategy. What this does is you see that strategy go through losing streaks and drawdowns, have 8 losses in a row, and then still end up profitable after a large sample size. So knowing that information and having that in the back of your head is going to increase your ability to stay disciplined, which is what good trading psychology is. It's staying disciplined to your strategy and your risk management plan and not letting fear and greed take control when you're placing trades and when you're trading live. So backtesting helps us with that tremendously. And another thing that helps us with that tremendously is having this good risk management plan. The more money you lose in a losing streak or on a trade, the more emotional you're going to get. Having good trading psychology is all about not letting your emotions interfere with your statistic advantage you have from your trading strategy. So having this good risk management plan decrease that emotional instability that we all have if we lose a lot of money Instead of losing a lot, this risk management plan makes it where we lose a little bit of money, and it helps us to control that roller coaster of emotions we have when going through winning and losing streaks in live trading. So those are two things that most retail traders don't think about at all. So if you've done all this, you already have a leg up trading psychology wise. The other thing you can do is study any video or book you can find from Mark Douglas. That's one of my favorite people in terms of trading psychology to listen to. And I've gained a lot of my own good trading psychology hacks and methods from him. But on top of all of that, number 9 is going to help us with trading psychology as well. But before we get to that, let's take a look at number 8. Number 8 is to create a full trading plan based on everything above. So in a trading plan, the most simple form of it is to define your exact strategy, entry, stops, and targets, the whole strategy. Also define your exact risk management plan. Also define your optimized trading pairs. And when I say your whole strategy, that includes your optimized strategy, right? So everything you've optimized for needs to be in this trading plan. Your risk management plan needs to be in there. And you can add things like your goals and maybe put something like what the bad things that happen are if you have bad trading psychology, and the good things that'll happen if you continue trading the plan. Your backtesting data has proven that it will be profitable over time. All of that should be in a trading plan. And this trading plan should be written down. On a Google Doc is fine. If you want to just write it with a pen and paper, that's fine too. But it's something you need to read every day before you get into markets. You need to have an idea of, okay, look, this is what I trade based on. I only trade double bottoms at support. Remember, that's a generalization. Your trading plan can have multiple strategies in it. It's not a big deal. It just needs to be written down. And so it needs to be a full plan that you implement every day you come into the markets. That is a full trading plan. And you need to have that before you ever try to trade live. So the further down this list we go, the more rare it is that anyone watching this video has completed all these steps. And I'm not saying that to try to make you feel bad whatsoever. I was in the same position. Over a year of my trading, I went without completing these steps. So I know exactly where you're coming from. It's not like I'm blaming you for anything. I'm just trying to make you aware of what's necessary before you should, in my opinion, start trading live. Obviously, it's your money. Do whatever you want to with it. Just trying to share my experience with you in the hopes that it helps you to transform your trading. Let's go ahead and move on to number 9, which is demo trade for between, I don't know why it says, demo trade the above for 1 to 3 months. So your full trading plan that you've created, the reason we want to demo trade it, as I said earlier, this is going to help with trading psychology. If you see your trading strategy go in and out of losing streaks, winning streaks, and drawdowns and come out profitable over the course of 3 months with you trading your exact trading plan in real markets, then your confidence in that strategy is going to go up dramatically. And the problem most traders have with demo trading is they're like, oh, no emotions are involved, so I just trade whatever I want to. That's not what I mean by demo trading. If you're doing that, then demo trading is absolutely useless. But if you are demo trading only using the exact trading plan you've created, then that's going to give you a lot of confidence and a lot of knowledge about that trading strategy. So that's the reason we need to demo trade for between 1 to 3 months. I know there's no emotions involved in that, but at least you'll be getting an idea of what it's like to be behind your computer at the times you need to place real trades in real markets, even though it's on a demo account. This is all very necessary in my opinion. So that is number 9, and number 10, for all the glory, go live and start making money. If you go through all 10 of these steps, your chances of becoming a profitable trader will go sky high compared to anyone else that's trying to trade in the Forex market. And now I want to give you a video from our channel that can act as a resource to help you master each of these steps. Before I do, remember, this is like the map to profitable trading. If you're starting out here and you're going to a destination you've never been to before and you have no map, you inevitably will get lost multiple times and you may never even make it to your destination. But if you have a map and you have the directions you need to go, you will very likely go from where you are to trading profitably to that final destination. That's a movie, and I'm really scared of those movies, to be honest with you. All right, so now let's get into the resources that can help you with each of these steps. So I'm gonna go over to our YouTube channel, and on our YouTube channel, if you scroll down, the first playlist after our regular uploads is called New to Forex Start Here. So in this playlist is a video that corresponds with each of the lessons I was talking about, with each of the steps on that checklist, and I want to point those out for you. In terms of the basics of Forex, the very first video that states Forex trading for beginners will give you everything you need to know about what the Forex market is, what a pip is, how to calculate a pip. We go through a little bit on leverage in that video as well. 8 brutally honest things you must do first year of trading is a very similar video to this one, so you can skip that if you'd like to. But if you'll notice, we go through orders, how to place your first Forex trade. We go through another lesson on margin, and leverage. We go through another lesson talking about what spreads are and how they affect our trading. So after these few videos, that's when you can say, cool, I've essentially mastered the basics. I can check off step 1. Next, I have this video on technical analysis that's about 1 hour and 20 minutes long. You can watch, and if you watch it a couple of times, you'll probably know everything you need to about technical analysis. You can check that off the list. This Master the ATR indicator is about the ATR indicator itself. It's my favorite indicator, but also has a strategy in it that is rules-based. So feel free to watch that in order to learn the strategy. We also have plenty of other strategy videos littered across the channel, so feel free to pick any of them. They're all going to be rules-based trading strategies that have proven to give me a profit over time. Next up, we go through a full TradingView tutorial. This belongs in the basics section, but you get it. If you watch this video, you'll know how to analyze and trade from the TradingView platform. If you're on a different platform, you can just look that up on YouTube. I personally trade with TradingView, so I don't have a tutorial on like MT4 or MT5. I don't use those. So next up, we have trading psychology here, which it would be fine to watch these now, but if you want to skip these and go in the exact order, you can scroll all the way down here to Forex strategy testing, easy backtesting for beginners. This video that I'm hovering over right now is a video that's all about backtesting. There is also a full rules-based strategy in this video, and we go through backtesting and optimizing in this video. So that will take care of those steps for you. Next up, we talk about another strategy. So at this point, you have access to a few different trading strategies to pick from. After that, we'll go through risk management. So at this point, after watching these 2 risk management videos, you've made it from step 1 of the basics all the way down to risk management. You've learned the basics. You've learned strategies that are rules-based. You've learned how to backtest and optimize those strategies, and now you're learning risk management. After these 2, you'll know risk management, and you'll be able to implement a correct risk management plan for you based on your own risk tolerance. At that point, you can go back up here to these 2 videos for a trading psychology lesson, which will give you a good handle on how to implement good trading psychology, and that gets you all the way through lessons 1 through 7. And at that point, after watching those videos, you'll be able to check these off of your profitable trader checklist. Now, in terms of creating a full trading plan, that is extremely self-explanatory. If you've made it through steps 1 through 7, you already have a trading plan. It's just not written down. So the only thing you have to do is write that trading plan down, right? And in terms of demo trading, another thing that's self-explanatory, create a demo account, start trading on that demo account. So I don't have videos on those just because I feel like they're so simple that there's no reason to create a full video explaining how to create a trading plan, which is just writing down everything you've already done, and how to demo trade, which is just demo trading. Now, if you don't feel like scouring through YouTube to find all this out, and if you want a little help with all of this as well, then we do have some space available in the TTC FX University, where essentially I'll be there and be holding your hand through the process of learning all of these steps. We have an entire course that is organized to teach you each of these steps in the correct order and with plenty of detail for you to be able to master each of these steps in record-breaking time. Along with that, you'll have access to the Pro Trader Report and Best Setups of the Week videos, which are me explaining to you the areas of structure I'm paying attention to for possible trades for the week ahead. I send out about 3 to 5 email analysis each week, which are trades I'm actually placing based on the strategies you learn in the course. And yes, there are strategies in the course that I have not taught on YouTube. On top of all of that, you'll also get priority coaching support, which means that Anytime you have questions or concerns about trading or the course, it'll be me personally answering those questions for you through email. And if that wasn't enough, the university comes with a money-back guarantee that has no time limit. So if at any point you take the course and feel like it wasn't valuable enough based on what you paid, all you have to do is send us an email and we get you refunded ASAP. So if you're interested in taking us up on that risk-free offer, it'll be the first link in the description, or you can go to www.ttcfxuniversity.com. If not, that's completely fine too. Make sure to hit that subscribe button if you made it to the end. Click that like button for me. Comment if you made it to the end, and I like every comment that does say made it to the end. Hopefully I can get over this flu pretty soon and get you guys some more content. I hope you trade green, and I'll talk to you in the next video. See you soon.